Okay, guys, well, thank you very much again for joining our latest webinar. We're going to be focusing in predominantly on Manchester today, exciting part of our business over the last couple of years, and some current sites we want to talk to you about. And we've also, see a long-term play in Manchester. So yeah, thought we'd run a webinar to educate people on that. Agenda today, so we're going to talk a little bit about, I suppose, property as a whole and why people are still investing in property. Give you a brief market update of what's happening in the wider market. We'll then drill down into Manchester, the demographics around Manchester. We'll put a spotlight on one of our current developments with some exciting opportunities in there, and then we'll leave it open for some questions at the end. If there are any questions, there should be a little question box in your top corner of your screen. If you want to pop anything in there, and when we get to that slide, I'll jump into there and see if we can answer those for you. So to get started then, so meet your hosts. So myself, for those of you that don't know us or know myself, I'm Andy Butts. I'm the New Homes and Investments Director here at Centric. I'm based in Birmingham in the UK. My other colleagues on the call, Sean, do you want to introduce yourself?
Hi, how are you doing? Sean Bennett, based in Hong Kong, originally from Wales, which explains the spelling. But yeah, based in Hong Kong, been here 5 years and help expats in and around Asia and the Middle East to invest into property.
Well, John?
Hi guys, yeah, I'm John Treacy. I've been in Asia for 18 years, and again, I've helped lots and lots of clients invest into the UK. A lot of Birmingham, and now a lot of Manchester. So I'm looking forward to talking more about Manchester today.
Excellent. Okay, moving on then. So why property and why the appeal of still investing in property? There's obviously a lot of doom and gloom that's been heard, I suppose, over the last few years about property investment. But for us, some of the key things that our clients look at and that we kind of communicate to our clients. Obviously, we've got wealth creation, right? That's why everybody's investing, whether it's in stocks and shares or whether it's in property. But property historically, and with the predictions that are laid out in future, is also a really good way of wealth creation and helping create that. It's one of the few asset classes that actually provide passive income. So compared to stocks or shares, where yes, the asset might increase in value, it will actually produce you a monthly cash flow. Now, depending on obviously how much you leverage this and how much borrowing you put in or how much deposit you put in will depend on that cash flow. But people do enjoy passive income from cash flow. And like I said, it's one of the few investment asset classes that actually do that. Again, people enjoy the particular feeling of financial security with a property portfolio. Again, it's tangible, it's an asset that can be leveraged, and it does help create financial security and helps the portfolio grow in that sense. It helps protect against inflation. Obviously, there are some things such as savings accounts, etc., which really erode with inflation. But property's been, over the last 100 years, and again, the predictions show that it's absolutely within that class of protected against inflation. And diversification. So you might have different types of asset. You might have stocks and shares or bonds and property. So it's one that can be added into the investment portfolio quite easily. But also there's lots of different types of property investments. So, you could look at off-plan, which is what we specialise in, investment, new build. You could do HMO, you could do student. So you don't have to have the same type of property over and over again as well. So you can diversify your portfolio within the sector. So those are some of the key things. There's more appeals to obviously property, but there's some of the key things that we think make property still a very strong investment option. I alluded to it a little bit earlier, but I think a lot of people, when you talk about the property market, feel that it's it's a negative space at the minute. But actually, under all that kind of negative press, there are some really good positives and some green shoots that are happening. I show this slide just so that you don't just take our word for it. People such as Financial Times, BBC, some industry experts such as the Negotiator and Rightmove are all showing that there's been growth over the last few years in the property market. Most people think that it's been stagnant or decreased, but in the first quarter of this year, we've seen property prices continue to increase year on year, and we've also seen the Bank of England base rate start to reduce. So obviously, as borrowing costs come down, we're definitely of the opinion that property investment and property demand is going to increase, and therefore, without fail, we've still got a supply and demand issue. So property prices are forecasted to continue to increase over the next 5 to 10 years. This slide is a graph showing the UK interest rate since 1975, so Bank of England base rate. You'll see if you've been in the market since 2007, 2008, we've obviously we've been a bit spoiled actually, we've never had such a low interest rate as we have over those years. But I don't think that's healthy, and I think most economists will tell you that having a base rate of 0.25% or 0.5% isn't really healthy for the economy and the growth of the country. So actually, where you look at where we are now, and actually it's probably just started to dip a little bit further, in line with historical base rates, we're actually still at a relatively low point. And I think it's just that evolution of people becoming accustomed to or conditioned to what will be the normal base rate. A lot of predictions are saying that the base rate is going to sit at somewhere between 3 and 3.5% going forward. That's the ambition of the Bank of England. But I think we've had it so good for so long here, and the speed in which it crept up was a massive factor why people have kind of taken time to come back to the market and realise what those new borrowing rates are. But I think it just helps put into perspective where borrowing rates were and have been historically. And actually, if we can get down to borrowing that starts with a 3, then it's not such a bad position for us. It's healthy for all aspects of the economy. The slide here is a forecast from Savills, so international real estate business. It's a 5-year house price forecast, and it drills down into the regional growth. So first of all, the UK growth, they've suggested that it will increase by just over 23%, so 23.4% by 2029. There's a few key locations here that we've operated in, so the West Midlands, the East Midlands, but obviously today we are talking about Manchester in the Northwest, and actually it does have, I think it's the highest prediction out of all the big players, the Savills, the CBREs, etc. They're all predicting the Northwest will have the highest rate of growth capital price over the next 5 to 10 years. So they're predicting a 5% growth for this year, and by 2029, just over 29% capital growth price increase. So again, locking money away in one of these assets is definitely a long-term solution, but one that has got all the right attributes to continue to increase in value, which is what people look for when investing. Sean, I think I'll hand over to you here to drill into Manchester.
Cool, good stuff, Andy. Nearly forgot to take it off me then. So cool. John joked a little bit at the start about Birmingham. We obviously cover a lot of areas around the UK. Our head office is in Birmingham. We're very bullish on that, but there's absolutely no denying that Manchester gets a huge amount of attention. It's been one of the fastest growing cities, if not the fastest growing cities over the last 5-10 years in terms of property prices, but also potentially more importantly, the actual rounded kind of economy as well. And as you've just touched on there, it's expected to do so as well over the next 5 years. Why is that? Now, the UK has probably the last, again, circa 5-10 years, they've started a government kind of scheme called the Levelling Up Agenda, which is effectively trying to spread some of the economy away from London to these regional cities. So, for example, you've had the BBC head office go to Manchester, you've had ITV, you've got Google, have got a massive office there, Adidas. I think I read the other day you've got around 80 of the FTSE 100 companies have offices in Manchester. And again, when you're looking at kind of regenerations, growth, young professionals moving there, all these things, they really feed into that kind of undersupply of properties, desirable places to live. You have some of the top hotels in the world opening there, some of the top Michelin-starred restaurants opening there. So it's a very kind of exciting place to be. Now, in terms of the statistics on the screen, the big one is there's quite a lot of numbers there, second biggest economy in the UK, all these different things. Now, the other large, apart from what I've just mentioned just now, the other large thing I want you to focus on is that 51% down the bottom. So you have these, huge amount of people already moving there, relocating from the likes of London to Manchester, but it also has one of, if not, it's this and Birmingham actually, which have the highest student retention rate in the UK. So that means people that go to university and stay after university. So look, we don't usually target students as tenants per se, but what that means to me is if people are staying after university, over half of people staying, that means there's job opportunities, which I mentioned, but also people must like living there, right? So Manchester is really, seen as the king of the north, and it's kind of really driving that northern powerhouse, as they call it, really driving that forward. Going next slide, please, Andy. So another big thing that I wanted to mention is Victoria North. So Victoria North is again a kind of government or local authority scheme regeneration, £1 billion of regeneration. So that's going to be, it says 15,000 new homes. It's also going to be commercial spaces, hospitality, restaurants. So again, creating a new kind of lifestyle area. Now you can hopefully see in the back, actually there's a bit of a map of Manchester. It's a little bit difficult to see, but there's a circle on the inside, and that circle is the prime kind of city centre. Now this Victoria North is just to the northeast of this city centre, and that's where there's going to be this huge regeneration. Prices, which again we'll come on to prices in a second. When you're looking at kind of price per square foot for Manchester now, inside that ring road, you're looking at 500, 550, even £600 per square foot, okay, which is not very similar to some areas in London. So the centre of Manchester has got extremely expensive to buy and to rent. And again, that's all because of that kind of supply and demand. But what you're finding is there's these big regenerations in and around the city centre, like Salford, like Trafford, and like Victoria North, which are having a huge amount of regeneration. And again, people looking for these areas to buy in, and again, growth areas. Next slide, please, Andy. So again, this is a bit of a kind of look at our stereotypical people who are buying in the UK in Manchester, but also the people, tenants. We've been selling Manchester property for a long time, and people are renting out these places. Okay, again, you have marketing. Marketing's a big thing. I always say how Birmingham is a little bit more kind of finance and law, if you have to put them into holes. And then Manchester is more kind of marketing and tech, if you were being stereotypical about it. Okay, and these are the kind of tenants that you're looking at: software developers, sales, marketing, like I said, BBC, ITV, and all those kind of things. Next slide, please, Andy. Okay, Osborne Yard, I'll pass you over to John, who's going to talk you through our top pick in and around Manchester at the moment.
Thanks, Sean. Can't believe you spoke about Manchester and didn't mention the football teams, but it doesn't need the football teams, right? So, yeah, Osborne Yard is a project that we know very well. We've put around 15 clients into this project so far. We like the developer, we like the location, we like the sort of the growth potential, and we're going to deep dive into that right now. Okay, thanks. Next slide. Okay, so where is it? So Osborne Yard is around 5 minute walk from Ancoats. Now, Ancoats is a very trendy part of Manchester. You're looking at one beds there, circa 300 to even 400,000 for a one bed. So you're right on the doorstep. Literally, me and Sean and Andy walked this time last year, actually. Yeah, 5 minute walk from there, which is like cafe culture, lots of coffee shops, nice restaurants, bars. And this location of Osborne Yard is literally 5 minutes away from there. So you can see that it's going to just grow and become part of that over time. You're very close to Victoria Station. You've got a good network of roads. You've also got buses. So very good location in the heart of Victoria North. And Victoria North, as an analogy for London, is very similar in scale to sort of Nine Elms with regards to regeneration, also Olympic Park. So, we always like to piggyback off infrastructure and redevelopment and regeneration. Analogy for Birmingham is obviously HS2 and lots of things like Smithfield, but this is Manchester's version, and it's to build new homes and to actually increase, how social an area is and how nice it is, and it's really on the up. So great location. Okay, thanks. Okay, at a glance, so the project is around 60 apartments in total, completing in Q1 2026. We're going to come on to the pictures of construction where Andy was just a couple of weeks ago. Now, this is quite exceptional that it's only 10% requirement on exchange of contract. So if you like an apartment for example, a 2-bed today and it's 335,000, you only need to put 10% of that on exchange of contract. The balance is not payable until completion, where typically our clients will take a mortgage. It's designed for the professional tenants, like Sean mentioned. So you've got high specification finishes, landscaped grounds, some units with large terraces, which is a very much a post-COVID demand for some people. And you've got luxury 2-bed and 3-bed remaining. And the developer, they've done 10 plus developments in Manchester already. Yes, so a bit more on CERT. So leading Manchester developer. What's unique with CERT is that they actually are one of the few developers that I've come across that really want to go to the end-to-end with their clients and their buyers. So for example, a lot of people, developers will build and then they pass over to other institutions, but they'll actually happily take on lettings and management. They do the block management and estate management of the buildings long term. So they don't just build it and sell that. So they're actually in it for the long term with their clients, which is pretty refreshing, to be honest. It means that they can negotiate on sort of the lettings and management terms, which is one of the incentives today. So yeah, a really bona fide, robust developer from Manchester. Some CGIs. So you will see quickly that this is really designed for professional tenants. So really nice specification, nice bathrooms, nice living spaces, nice communal spaces. So that professional tenant is really for rental or to buy is really what they're trying to approach. So this is the build update. So yeah, they've topped out on the building, and the building spaces is coming along quickly. So I think we're very much on track for a Q1 2026 completion, which, when people start to get their mortgage in place, probably from about August time. So if you were buying now, you'd exchange, and literally within a month after that, you'd be starting your mortgage. So yeah, it's a really nicely spaced out project without it being too far away. There are things in Manchester that we've seen which are 3-4 years away from completion, which is great, but a lot of our clients want to get done and dusted to get a return, so this isn't far away in that respect. Okay, I'll pass that back on to Sean. He's going to talk through the best example picks right now.
Cool. Yeah. So here's our top pick. Okay, it's a 2-bed, 2-bath on the 4th floor. Again, 2-bed, 2-bath, perfect for you could have 2 young professionals sharing, or you could also have a young family as well, right? So we do really like that second bathroom. We can go on to the next slide. Andy won't go through all the numbers quite right now because it's quite detailed, I guess, but just to give you guys a bit of an example of when we meet people, we can put these kind of cash flows together to give you an idea of how much money you need and when, what will your monthly position look like, what's your 5-year growth, what's your 10-year growth. So you can see this example, total cash employed, 111,000 and 12,000. Again, we do this more in a specific example for individual people. Show the next slide quickly, Andy, I'll fly through it. Again, so this goes through, for example, your yearly position. So it has how much rent you'd get, which is the one which Andy's covering now. The purple color is the mortgage payments per year. And then you also have the lettings and management fee, which is the light gray color, and then also service charge as well. And then you'll be left with a net number at the top. Again, shows you this is over the year. Of course, you'd split that up, so you're in a cash flow positive position per year. And again, as we looked at, the rental demand is expected to go up about 2.5% in the next 5 years as well. So we've taken that into account as well. Next slide. Again, so this shows if, for example, you take all of that rental income that we spoke about over the 5 years, plus the price growth, which is we've said sellers expect, then you'd end up with £175,000 in equity. So sorry, cash return of £121,000 plus your initial equity of £175,000. Next slide. Shows an example of an ROI, and this is how we finish it all off. Again, when we go through, how we like to do it is, we go through a one-to-one with a client. We then go through that cash flow for you. Are you based in the UK? Are you based overseas? Are you a first-time buyer, second-time buyer? When does it complete? What's your expected interest rate? Some people, for example, they might get better rates, some people not so much. And then we'll go through all of this. What's your monthly position is the big thing that people care about. So how much money you need, the big thing, when you need it, For example, John said 10% now, the rest later, your monthly position, and then finally your 5-10 year plan. So in 5 years, you're going to take some of that money out. 10 years, you're going to take some money out. You're just planning to pay it off quickly. Whatever your plan is, we'll work very closely with you to look at that on an individual basis. Next slide. So I think just to finish off, so as John said, we've got 8 units left. Okay, 8 units left, and the developers obviously motivated to get them closed, get them done. So they very kindly offered us these incentives. Okay, so the first thing is 6 months free lettings and management. Okay, so if you go with a recommended lettings agent for 2 years, they'll give you 6 months free, which is a nice thing. We don't touch on this very often, but the 3-bed townhouses. So they have these on the ground floor. They have these 3-bed townhouses, kind of duplex 3-beds, which have their own entrance. And the developer, which is very rare, especially with Manchester, which has huge potential given the football teams, as John mentioned earlier, and other kind of concerts and stuff going on. They're willing to do short-term lets on these 3-bed townhouses, which is huge, could be a huge potential. The 3-beds are around £405,000, I believe, off the top of my head. And then the last thing is a £1,000 legal fee contribution. So you buy something now, when you complete, you get £1,000 towards your legal fee. So again, this is 90 units. We've already sold. There's only 6 or 7 left, so they've been extremely popular. Most of the other people haven't had these incentives, so these are some nice little thing to close the books out quickly. So if you're interested, reach out and we can discuss further. Cool.
Okay, I'll stop sharing. I'll quickly have a look at questions. So there's a question here around payment structure. I think we alluded to it, but what is the reservation fee, payment structure, that kind of stuff. So John or Sean, I don't know who wants to take that.
Yeah, I'll do it. So if you're interested in an apartment, you literally pay £2,000 to reserve, which is forms part of the purchase price. And in 28 days, you'd exchange on 10% minus that £2,000. So, on a 2-bed, the pick that we had there was 335k. So you pay 33.5k in total. Then the balance on completion in Q1 2026. If you took a 70% mortgage, which most of our clients do, from overseas, you'd top up with another 20% on completion. The rest would be taken with your mortgage. So yeah, really friendly payment schedule. Anything under 20% is great, but 10% is pretty rare, and obviously shows that developers in a very good cash position and also very friendly for buyers.
Yeah. Okay. Great. Got one here about the incentive, asking is that guaranteed rent or is it? I think checking if it's guaranteed rent or a bit more maybe detail on the incentive.
Yeah, so not guaranteed rent. To be honest, we tend to stay away from things that are guaranteed rent because often I say, why does it need that? The places that we sell are extremely popular on the rental side, so it's not guaranteed rent. But what it is usually a lettings and a rental company will charge you 10 to 12% plus VAT of the monthly rent to basically fully look after the tenant, so it's completely hands off. So you're not getting called about a broken light bulb or whatever it is, and so they will give you that fee for free for 6 months. So over 6 months, you're probably looking at off the top of my head, probably about £1,500 in incentives. Just to give you an idea, we were chatting before, this is actually a site just near this, which there's a statistic that's come out recently, and the rental demand there is at a 98% occupancy, which is, when you compare that to the rest of the UK, is insane. So the rental demand is huge in Manchester and in this area.
I think the short-term let swing is big as well. It's very rare that you can get this, and not to name too many football grounds, it is a 1.5 kilometres, 1.5 miles, sorry, just over a mile to the Etihad. So to have that short-term let, you could get some some phenomenal rents on a short-term basis on these opportunities.
Yeah, I think that's 7% quoted as net as well, right? So the gross is probably in excess of 10%.
Absolutely, yeah.
Yeah, cool. Okay. I've got a question about new homes warranty. Yes, there will be a new homes warranty. It's a 10-year new home warranty, comes as standard with all new builds. Okay, cool. All right, I think that's the end of our questions, guys. So wasn't too stressful. So yeah, I suppose if there is anyone interested in these last few units at Osborne Yard or to talk about Manchester as a whole and future investment opportunities, then do get in touch with us. You can reach us via centricinvest.com on the usual channels. So, and one of us three or the wider team will reach out to you and get back in touch. So, John, Sean, thanks for your time. I know it's probably late evening where you are. Enjoy your evening, and yeah, thanks for joining, everyone.
Good stuff.
Thanks, guys.
Cheers.
Good luck.
Bye bye.